Hello, credit union executives. Welcome to See You on the Show, where we give you up-to-date information on how you can reduce risk, keep key talent, and take a strategic approach to your personal financial wellness. Hosted by me, Doug English, a certified financial planner and former credit union insider with ACT Advisors. My guest on today's podcast is Brian Kaas. Brian is the president and managing director of CMFG Ventures. Brian oversees all aspects of CUNA Mutual's venture capital program, including the acquisition of numerous portfolio companies. And in this episode, Brian shares how their philosophy guides the ventures they decide to invest in, talks about new ventures that are poised to have a big impact on credit unions and their members, and he shares what your credit union should be doing now in fintech. Welcome, Brian. Tell me, how did you get started working with credit unions?
Well, thanks, Doug. First, great to be here. My journey working with credit unions started almost a decade ago to the day I joined CUNA Mutual Group. My background before that was as an attorney of all things. Spent my career trying to solve complex problems in a transactional setting. And when I joined CUNA Mutual, and there was an opportunity a few years later to lead our venture capital arm, it was really an intriguing opportunity of how do we kind of solve some of the challenges and pain points of credit unions in terms of staying competitive and relevant with all of the change that's going on around us. And it's been a really great experience since then to really work with credit unions on a daily basis now.
Interesting. All right. So lots of stuff I'm sure that our listeners want to know. So how much money did CUNA Mutual put into this venture capital arm? Like, how is it structured? Does CUNA Mutual wholly own the ventures? Like, how big a stake are you taking in the companies? Tell us about all that.
Sure. Yeah, just a quick overview. So the venture capital arm is known as CMFG Ventures. We launched back in 2016, really with a focus to invest in companies that either at the time of investment or at some point in the future, we see an opportunity for those companies to work with credit unions to address their needs or to better serve their members. So that's sort of the underlying theme that really kind of weaves through all of our investments. Since we launched back in 2016, we've invested over $270 million into fintech companies. We're approaching our 50th company that we've invested in since that time. And really looking at holding an investment position that will be less than 50%, typically in the 10 to 20% range, oftentimes having a board seat or board observer role so that we can really get sort of an inside look and work with these fintech companies so that they're building solutions that will be relevant to the credit unions that we serve.
So the companies that you're taking a position in, since CUNA Mutual doesn't have stock, so you're taking a position in with cash, and then you're getting a board seat, and these seats are being filled by employees of CUNA Mutual or CUNA Mutual Group Ventures. Is that right?
Yeah, in most cases, it is somebody on our ventures team that will hold board seats. And we don't have board seats in all the companies that we sit on, but it is someone within CUNA Mutual that serves as a board member. And the capital that we do invest in these companies is really coming off of the CUNA Mutual balance sheets. We don't have outside investors and we don't have shareholders. We're a mutual insurance company. And really, I think that goes to the philosophy of, we're really investing for the future of the industry. And we can kind of make some of these investments and be more patient than stock companies would be comfortable doing.
You vet the companies and decide to invest in them. And then a credit union could potentially invest in them as well if their round was open. Or they could use their services or both. Is that right?
Yeah, correct. I would say certainly most of these companies create partnership opportunities for credit unions to work with them. And there's many companies in our portfolio addressing a very broad range of needs. Some are in the lending space. So they work with credit unions to kind of grow and accelerate their lending. Some might be in financial wellness, which is a critical mission of credit unions, and how can we use technology to serve a broader group of membership to address their financial needs and wellness. And in some cases, it's more just, kind of a more traditional banking technology to automate processes, create better member experiences. So a lot of different companies serving different needs. Yeah, we are starting to see credit unions start to invest in fintech companies. I'd say that's not real common yet. In many states, there are limits or restrictions on the ability of credit unions to invest, certainly outside of a QSO structure. But again, I think we're seeing more credit unions looking for some investment opportunities as well.
So let's talk about some examples. You said 50 companies in a almost $300 million portfolio. So I imagine you have lots of stories in there. Maybe it'd be fun to hear about some good ones and tell us about a couple of bad ones too.
Well, there are no bad ones. A lot of learnings along the way, I'll say that.
Okay.
I think some of the companies, by way of example of that we've invested in a company called CarSaver, which is an e-commerce platform for buying, selling, and financing a vehicle. As we believe that more and more vehicles will be sold online, what challenges or opportunities does that create for credit unions? And the unique thing about CarSaver, which is sort of I call it like an asset-light version of Carvana, in the sense that CarSaver is working with your local auto dealer to help them sell their vehicle inventories, and then can also work with a credit union to provide the financing for that vehicle. They're really kind of the technology that brings all these pieces together. Again, we see a big trend of more cars being sold online. This creates the opportunity for credit unions to avoid disintermediation. And in fact, we think this creates a great way to create a new engagement opportunity for the credit union member who, we hope will be able to go onto a credit union's website, working with CarSaver and go through that car shopping journey without ever leaving the credit union's website. So, that's one example of a company that we're really excited about.
Well, let's talk a little bit more about that one, because I bought a car online before, so I have some personal experience. So how long has that one been in the portfolio?
So we invested in CarSaver in the fall of 2021. So relatively new. CarSaver has been in existence for several years and have hundreds of integrations to really drive a lot of automation and kind of reduce friction through that digital car buying experience. They're powering the auto buying platform that Walmart will be rolling out. They power the digital auto buying experience for Nissan. So, we think CarSaver delivers the best experience, and the fact it's trusted by some of the largest companies in the world. We want to bring that technology again into the credit union space.
That's interesting. Obviously, Tesla, Carvana, CarMax has had that for a while. And again, I've personally had the CarMax experience. It's great. It really, truly is a great experience. Now, CarMax is looking to have you finance with them. They are not trying to help me hook up with my local credit union. How does CarSaver change that equation? And have you seen credit unions start to get involved in this short period of time?
Yeah, so we're now working with connecting credit unions in with CarSaver. And you're right, most of those companies that are selling vehicles online are looking to capture the financing. Carvana will also make it challenging to get financing from someone other than Carvana. But with CarSaver, they do not provide the financing on the loans. They'll integrate with partners to provide that financing, but they're not, at the end of the day, CarSaver is not the lender in the ecosystem. So it is a big distinction from some of the other digital auto buying platforms that are out.
Have you had some credit unions start to participate with them?
Yeah, we do have credit unions now that are signed up, including some very large credit unions that we're excited to have come onto the platform as partners of CarSaver. And there's some really interesting work that we're doing within CUNA Mutual to actually integrate a couple of the technologies that we've either acquired or invested in over the last several years to really deliver a very powerful auto buying platform that's integrated into the credit union system. We're pretty excited about this. We're not quite ready to roll it out, but we will be in the coming months, where we have technology from a few companies that will be fully integrated to make it easy for credit unions. That's a pain point. There's so many solutions that credit unions need to try to maintain. There's a backlog always for integration of these solutions. So that's another pain point that we're trying to solve within CUNA Mutual to mitigate some of the effort needed by credit unions to take advantage of these partnerships.
That's substantially over my skis, Brian. So I'm going to not pretend to be able to follow you down that path a whole lot further. Compare, if you would, the customer. I know credit unions got in trouble with Indirect several years ago, but Indirect's a big source of business for credit unions. And does the customer that you acquire through indirect lending, how do they compare with someone acquired through CarSaver? And is the net loan rate to the credit union similar?
One of the challenges with indirect auto lending is, I've heard the statistics, I could be off by a little bit, but I've heard as many as 90% of those loans are one and done, meaning that they get the auto loan on that vehicle, and 9 out of 10 of those consumers will have no lasting relationship with the credit union. So a lot of the technology that we're investing in is how do we increase both the engagement opportunities with the members and really kind of expand that relationship. So again, to stick within auto lending, we'll have a program called the Upgrade Program. And similar to how you can upgrade your iPhone, we want to upgrade people into newer cars that will have fewer miles, maybe fewer hassles from breakdowns and whatnot, but at a price point that is comparable to the loan payment that they're paying. And so that consumer or credit union member will be able to shop for and upgrade their vehicle without leaving the credit union website. We want to turn those members into returning members. And so I just think with where technology is at today, there are just so many more opportunities for credit unions to deepen those relationships.
That's a really interesting one. So let's talk about another one. Tell me another one that you're seeing make the biggest impact on credit unions and credit union members, or one that you think will.
Yeah, maybe to go outside of lending, we have a really broad suite of lending companies that we've invested in that are working with credit unions. But I'll maybe kind of go a different direction. One that I'm really excited about, it's a company called GoalSetter. And GoalSetter is a teen banking app. And I think what really sets GoalSetter apart from some of the other companies out there is the founder of GoalSetter spent a big part of her career at Nickelodeon developing content that was engaging for young people. She didn't have a financial services background, but I think that was a plus because she approached it from a very different lens to create content now that educates kids about financial wellness, that creates savings features and the ability to hold fractional shares of companies, and really kind of uses memes and TikToks and other content that really resonates with young people. So one, I think that's a really unique way to engage younger people. But I think for credit unions, what we want to look to do is, can we white label that app and try to draw in the next generation of credit union members? Because I think that's a concern and challenge for the industry. You look at the average age of a credit union member, and it kind of tends to creep up every year. But there's a lot of parents that are credit union members. There's a lot of grandparents that are credit union members that could use this app, offer it to a child, maybe put $50 in there to start that savings account for that teenager. And now that credit union has an opportunity to build a relationship with the next generation credit union member. So I'm really excited about that. Again, a very different challenge that company, I think, can help solve for credit unions, but one that presents a tremendous opportunity as well.
My first deposit account was with the credit union. And I could remember it was IBM Employees Credit Union in upstate New York. And credit union and the IBM employees used to have a fair. And so I could remember distinctly the Ferris wheel and the various fair stuff. And I had that associated with my credit union in my mind. So there was a good connection there right from the start. No financial education, but some good rides.
It's the next generation of that version, I think.
Different time, different place for sure. Obviously, the digital native and mobile are some of those trends that are hard for credit unions to acquire talent and to follow the very fast moving industry. What are the other trends that you are seeing that are being helped, or how can you help credit unions to keep up using some of these fintech solutions?
If you take a step back and you look at the amount of money that the big banks are spending on tech, so JPMorgan Chase has an annual tech budget that's about almost twice the size of the credit union industry combined.
Wow.
It will become increasingly difficult for credit unions to build technology on their own that is competitive with what the big banks are doing. And interestingly, they spend a lot of money and still end up partnering with fintechs at the end of the day because it's really tough to build what a lot of these companies are doing. Fintech companies have raised probably well over $200 billion over the last few years. We're seeing and we'll continue to see highly automated processes, no matter what it is, lending that can be done in a couple of clicks and funded within a matter of seconds. Sort of the days of having somebody fill out a complete application, go through manual underwriting, then take days to fund will knock out those lenders because consumers just have different expectations than they did 5 or 10 years ago. So a lot of companies tackling that and a lot of those companies looking to partner with credit unions to help them deliver that best-in-class experience to their members. One topic that I think is probably emerging, at least from a credit union interest standpoint, it is around decentralized finance, cryptocurrency. I think there's certainly a lot more credit unions that are wanting to really understand what this could mean to their credit unions. And I think what we saw, although it may have slowed down now just with kind of where crypto is trading, but a lot of money going out of their share accounts into cryptocurrency. So they're losing a lot of those deposits. And I think that at least raised the initial questions of, is there anything we can do to avoid those funds from leaving our credit union? And so looking at solutions in that space. But I think looking more than over the next 3 to 5 years, but what to 5 to 10 years out? I think there's going to be a lot of opportunity for credit unions to leverage some of this technology to lower costs for members, just given the mission-driven focus of credit unions. I think it aligns with a lot of the focus of decentralized finance to kind of drive a lot of the cost and efficiency out. Almost at times, it feels like an overwhelming amount of change happening. But what I tell credit unions is you don't have to solve everything on day one. But what I do encourage credit unions is, find a particular pain point or strategy that you want to focus in on where a fintech partnership could really kind of accelerate addressing that issue and use that as a starting, and then go out and look for solutions. Because I think sometimes credit unions might react to whatever solution happened to be introduced to them. So developing that strategy, I think, is really critical.
Yeah, and agreed. Very overwhelming. The number of choices is vast, and some are far down the pipe as far as how far they are built out, and some are very much in the beginning stages, and figuring out which is very time consuming. So I imagine your team is helpful in that you've done a large amount of vetting so that the credit union can have a bit of a short list if it's made it on to your list. Is there any track record there, Brian? When you guys invest in something, does it go to the moon? Have you had any, forget what you call the company that goes to the $1 billion?
The unicorn.
The unicorn. You got any unicorns in the portfolio?
Yeah, we have 5 companies that have hit unicorn status in the portfolio. So we've had some good success with some of our companies. And so it's providing financial returns to the organization, which I think is important because it allows us to continue to reinvest dollars. And sort of the pace of change isn't slowing down and want to continue to be very active. We want to invest in companies that are financially successful because those are the companies that are going to be around for the long term for those credit union partnerships. We don't want to invest in companies, obviously, that have a 2-year lifespan and then have to close their doors because that is a bad experience to credit unions that may have spent a lot of time, energy, and resources to work with a company only for it to no longer exist. So we really, again, for multiple reasons, want to invest in those companies that we think will be here for the long haul.
Let me ask you, I don't know if you have a company that addresses this. Obviously, there's been much discussion recently about courtesy pay and fee income resulting from overdraft activity, eliminating it or reducing it or making it some kind of a limited amount per month. Have you have any fintech activity in that area?
That's an interesting question because there are a lot of fintech companies that have products and solutions that can create new revenue streams for credit unions to really replace some of the non-interest income and fee revenue that credit unions have relied on. Credit unions have incredible trust and in many cases really great engagement with their members. And whether it be financial wellness companies, we have a company that we're just going to start working with credit unions on. It's called Tally. And so Tally really is a company that will help people pay down credit card debt and automates the payments to your credit card companies using an algorithm to pay off the companies in a way that is sort of most beneficial to the consumer. And we think there's opportunities where it can create some fee income for credit unions. It can deliver opportunities for growth for that company. But most importantly, it goes to the mission of really kind of helping out the financial wellness of the credit union members to help them get out of credit card debt. So, that's one example, but there's numbers of others where credit unions can offer solutions that create revenue streams that are really kind of a win-win for the credit union and the member.
Yeah, that's the hard part about that fee income, right? It's a very, very small number of members that generate a lot of the courtesy pay revenue. Figuring out how to serve those members and not live off from them, if you will, is, I know, got to be a tremendous challenge for credit unions. What I'm hearing you say is that there isn't a pivot that's direct in that area. It's more of a, let's help you stop bouncing all those checks. And there'd probably be I would assume, a nominal amount of revenue associated with that compared to the very large amount of revenue that courtesy pay has been for a lot of credit unions.
Yeah, and I think that's right. And I think that is something that is a fee that probably is kind of borne by people that are least in a position to pay additional fees. And again, I think there's just so many companies out there now that can promote and improve a person's overall financial status, again, in a way that enables them maybe to get out of debt sooner or to pay lower interest rates, to have maybe high interest debts that a member has with another financial institution and enroll them into a credit union loan at a much lower rate. There really are countless opportunities that these tech companies are enabling to better serve credit unions, again, in a way that really aligns with the mission of not only credit unions, but those fintech companies as well. You think of a lot of fintech companies founded by people that just want to build a $1 billion company at all expense, but you'd be surprised how many of those founders maybe grew up in a household where they were financially stretched or parents didn't have access to affordable credit, and it really inspired them to build a company to help that next generation avoid the challenges of their parents and their families. And so there is a lot of mission alignment even between founders, many of the founders we invest in, and the credit union mission.
This being a complex, fast-moving, broad space, I know you have an educational resource for credit unions to start to kind of figure out what to do and where Talk to me a little bit about the Fintech Forum, and is that the starting place for a credit union?
It certainly is a starting place. Fintech Forum is a community that we launched late last year to bring fintechs and credit unions together. So we've spent 6 years talking to thousands of these fintech companies and have developed a lot of learnings and have met some companies that we think really are difference makers. But how do we kind of share that information with credit unions? And so we created the forum, and this will be a community that is available to credit unions at no cost. And we really look at a variety of some of these really significant trends that are emerging in financial services, but really looking at them through the lens of, what does a credit union need to know to use this trend or disruption to the advantage of the credit union? So we talked a little bit about the shifting of auto sales online. That can be very disruptive to many credit unions that rely on auto lending if they're not sort of ahead of where that trend is going. And so we'll talk about those trends. We'll talk about companies that enable credit unions to leverage that trend to their advantage. And so, each month we take a different topic. We're creating a library of content and information for credit unions to learn about opportunities for partnerships, to learn about some of these trends, really, again, more with a credit union focus on the educational content that we create.
So, a credit union wanted to learn more about the Fintech Forum and companies that CUNA Mutual has been involved in. Is it go to the CMFGVentures.com website? Is that where you would start?
Yeah, that's correct. CMFGVentures.com. There's a registration link for the Fintech Forum. It will take 15 to 30 seconds. And then you'll get on our list. You'll see all of the speakers and topics that will be coming up for the remainder of the year, and also have access to sessions that we've had in the past. So again, it's a great free resource of content in companies that we've vetted specifically for credit unions.
Thank you for all that great information, Brian. As we sort of wrap up, any final thoughts for credit unions that might be listening to this podcast? Obviously, we told them the website to go to. Any other guidance you want to offer?
My advice to credit unions is, I think the time is now to really get serious about exploring and pursuing these partnerships if you're not already. I think this needs to be a discussion that occurs on a regular basis among board members of credit unions and among the C-suite of credit unions. And the level of change and competition is changing so rapidly that I think if a credit union kind of pushes this and kicks the can down the road a few more years, they will be that much further behind. So that's my parting advice for credit unions.
Excellent. Thank you so much, Brian, for your work and for joining me today on the podcast.
Thank you so much, Doug.
That's all the insider credit union knowledge we have for this episode. Are you enjoying the conversation? Be sure to subscribe and share your thoughts with other credit union leaders by leaving us a review. See you next time on See You on the Show.
The opinions voiced in this material are for general information only and are not intended to provide specific advice or recommendations for any individual security. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Economic forecasts set forth may not develop as predicted. All performance referenced is historical and is no guarantee of future results. Indexes are unmanaged and cannot be invested into directly.